Hello YouTube and welcome back to another video. Today we're going to be talking about interest rates and whether or not we are going to be going higher or lower. The reason why this matters today is because the 10-year Treasury note is currently trading here at 3.02%. This is considered a threshold. Once we get back about 3%, that pretty much means that the market thinks that we need to have higher Fed funds rate. That is a very interesting question today because there is some commentary coming in tomorrow that we have to pay attention to. What's going to be happening tomorrow? We have an ECB rate decision coming in pre-market. This is going to be the whole circuit. It's going to be interest rate decision, press conference, all that good jazz. And the reason why it's so important is because we also have the money managers, money market, wager on 200 basis points of ECB rate hikes by May 2023. It is currently June 2022. So in about 11 months, we're expecting that they're going to have risen interest rates by nearly 200 basis points, which is also the path the Fed is expected to take. After that, we also have core CPI coming in on Friday. And the reason why this is also interesting is because we also heard from Ray Dalio, again, the hedge fund manager, which has returned the most assets and most profit to investors ever in history. So this guy's opinion kind of matters. He really looks at macro, and what he is saying here is that Ray Dalio says central banks are to cut rates by 2024. What he's talking about here is that we believe that we are in a tightening mode that can cause corrections or downward moves to many financial assets. The pain of that will become great, and that will force the central banks to ease again, probably somewhere close to the next presidential election in 2024. It is a structural inflation situation that is going to produce stagflation. And again, we're not here to read every single little comment. I encourage you to read this if you want to. What I want to focus on is what does it mean? So it's great that we get this headline, but what does it mean? Tell me why this matters, because we're here to make money. Here is the Fed funds rate effective rate going all the way back to 1955. So this is basically what the central bank or the Federal Reserve is charging for interest. As we can note here, we should all know this pattern, right? High, higher high, higher high, higher high, all-time high. Then what do we have? Lower high, lower high, lower high, lower high, lower high. So what Ray Dalio is basically saying is that this line is not going to get broken. It would be a huge surprise if this did. So again, if we look here, is that kind of where we're gonna peak? We got to about 2.5% on the last cycle. So what Ray Dalio is basically saying is that I think we're going to get a lower high or maybe a double top, which means we can't really get back above 2.5%, which is the dotted line here. So that's pretty much what he's telling us. And this is very, very important because this is a systematic change, which could shock the system. So I want to show you one more thing. And again, I'm trying to keep it simple, but drop me a comment. If this does not make sense to you, please make sure to let me know. I'm doing my best to try to present it in a couple of minutes without boring you and to keep you engaged. So now let's look over here at TNX on a monthly chart, which is what I was looking at. Oh my goodness. This goes all the way back to when? The 1980s. And this was a notable breakout that we got because this pattern here is very bullish, right? Roughly an inverse head and shoulders or a cup and handle. And once it broke out, that was a false breakout, dove all the way down to a new low. And now it doesn't look like it wants to go back. It's breaking out. And this is what I would call runaway inflation. So the 10-year Treasury note is already broken out of a 40-year pattern here. Once it broke bullish, it didn't want to look back, right? Breakout, continuation, and even more, which is why that 3% really matters. So over here, again, 30.2 is going to mean 3.029%. Just drop it one decimal point. So if this chart here is finally going to break bullish, and again, head, shoulder, shoulder, high, lower high, lower high, lower high, lower high. If you forgot that this was the federal funds effective rate, what would you say? It's going to zero and maybe even lower. Why? We got that downtrend like I just mentioned. So keeping that in mind, if we do break bullish, that would mean that inflation is not properly being reflected in the market, which means we're probably going to have a whole bunch more downside. So what Christine Lagarde says tomorrow in regards to that 200 basis points, which has currently been put in, is going to really matter. Is she saying that's accurate? Is it too much? Is it too little? Or is it just right? And again, notably, what is the commentary? All right, so one more thing here. Then we're going to look at have a look at some charts. We're going to look at some SPY options as a continuation from yesterday. Fear and greed. We ticked up an extra point here. So even though the market is down, market ticked up 1 extra point, which means people are a little bit less fearful. Final thought here as we're looking at charts is just going to be looking at the DAX. So again, there's the feedback loop from the rest of the world. Just like how if we get a really bullish, really bearish article from Target, what does it do? Well, it drags sentiment, which means there's contagion or it spreads. And the same thing happens across the world. So the last day that European traders had to trade before we have that ECB rate decision was today. So what happened? We got a reversal pattern. We gapped up and sold off. The opposite of what happened in the US yesterday. So I think this is people taking a little bit of profit into the uncertainty of that ECB rate decision, because 200 basis points after being in negative territory, there could be a nasty knee jerk to this. And again, we can also note that it's actually broken bullish. It's over the 50, and now it looks like it wants to potentially go higher if it can hold roughly this area, 14,000. So if this is bullish or bearish, it's probably going to push or pull us in the US market tomorrow. All right, now let's talk about what we were looking at yesterday, or this consolidation range. So what's really notable is just that the range held. We note here that the close yesterday is at 407.61. Today we hit a high of, yesterday we closed at 415.74. Today's high is 415.82. So we made it just a whisker above the closing price, but not above the high of the day, which means we have an inside bar. And this is important to me because, again, I was looking at one big day, 2 down days, one big up day, 2 down days. And what's today? It's Wednesday. Mr. Red made a reappearance today. And we can note here and just see that, yep, market's red. It's Wednesday. It's no big surprise. So the consolidation pattern continues. And because tomorrow is Thursday, and it's the last non-expiry day this week, I'll be watching to see what they do. I've been noticing them going overtime, again, trying to scrape those SPX chains we looked at yesterday. But until this range breaks, what are we doing? We're consolidating or going sideways. Remember, charts can do 3 things. They can go up, they can go down, or they can go flat. So if right now we're currently going flat until this range breaks at roughly 407 and roughly 417, or about a 10-point range, what are we likely going to keep doing? Going sideways until we build up enough pressure to release, either bullish or bearish. And again, we've gone through the pattern before, so I'm not going to bore you to death on that. What I want to look at instead here is, again, going back to SPY and looking here at our daily chart and noticing that the volume is really dropping off. But this is volume dropping off into a summer, which is normal. And yes, I know I have to activate windows. You guys tell me all the time. I don't want to pay for it. I'm a cheapskate, all right? Looking over to here, not a single, only FXI has positive volume buzz. So most stocks are seeing 50% or less trades being executed. S&P is at negative 53 here, which means that the volume is drying up. So moves are getting exaggerated up and they're getting exaggerated down. We can also note that, again, I went back through and did a little bit of analysis, looking here at the daily. We have one little overshoot, but otherwise, 1, 2, 3, 4, 5, 6 clean touches. That's pretty relevant to me. We're in a bullish pattern, and all we have to do is go sideways to break it. We can also note that the 50 DMA, or the yellow line, which is up here, you can note that. Again, it aligns with roughly our 422 low here, right? 420.76. So we're getting pretty close to that now. It's going to keep curling down. Let's see how we can meet it. So again, low volume, but is the volume transacting on the stock, or is it transacting on the chain? Look at what the price was today at the close, 411.2. Let's look at today's options chain. So again, we're looking at June 8th for SPY. And here we can note we're looking at the 16. So again, that's going to be 8 strikes above and below. What we can note is, oh God, it's getting busy again. It's getting busy. And what I would note is just that first thing we want to look at is going to be the open interest. And that's going to be the numbers here over on the far right or all the way over here on the far left. So we can look at how are people motivated going into today? Meaning, if we were to close at a certain price, who was already betting on that going into today? On the call side, I'm noticing 415 and up to 418, which means anything below 415, all this open interest here, it's gone. Right? They torched it. So that's what it looks like they did what they did today. Anything below 415 got smoked. That's where the heaviest volume is too, because they're trying to what? They're trying to salvage that open interest. So those 300,000 contracts that traded today are the busiest option. Why? It's because there was premium attached to them overnight. They're trying to salvage it. Have you ever done that? Try to fix a trade by trading more. So again, keeping that in mind, anything below 415 or 414 was maximum pain for the calls, but on the put side, where's maximum pain? Right. They're going to have to pay some of these babies out. Looking at overnight, we had 415 all the way down to 410, and then 410 down to about 405 is also very notable. So these ones got smoked, right? 410 to 405 put spread got burnt, and they paid out some of these puts. So in terms of where the max pain was, it was probably right around, I would say probably 410, 411. So now we understand that that takes care of both the call and the put side. You guys seem to like the commentary yesterday on the options chain, so I'll try to explain the reason why we closed at 411.2 today. And the reason for me is because now we understand the open interest. Now let's look at the volume. So where do the big stacks start? 412, right? That's the 200,000 stack here. Where do the big stacks start on the call side? 412. So what does that mean? Well, if 412 and 411 is where the maximum pain is, what do? You split the difference. And that's kind of what happened today, 411.2 close. So that's where there's the most premium being burnt, and they also have the time to scrape all the other chains, including SPX, QQQ, and yada yada. So now we understand what happened today, and they were able to torch it. What are they looking at for Friday? Because the Friday printed close is the most important price of the week, as we've known. All right, looking here, what do we got? First thing that sticks out is 100,000 in volume here. Where? At 410, where we have open interest and we have continuation. We have a 410, 405 put spread going through to June 10th, which is going to be in 3 days. For what? For SPY, and we're looking at the 16s. All right. So on the put side, we notice that there is continuation, which means the same people who were buying those 410, 405s for today were likely the buyers of these 410, 405s for the 10th, for Friday. Okay. So the bears seem more motivated. Yes, they seem more motivated. And we look here on the call side, it's a little boring. We got 415 naked calls, and probably maybe up to 420. I don't know. But we also note that they're splitting the difference here. We got 4125 and 4175. That's already notable to me. Why? They know, right? They might have to, though that extra 50 cents might really matter here. Same thing at 4075. So in terms of motivation, I want to see what's going to convert into open interest here, either calls or puts. And I'm looking at where they were trading it today. They were most busy on where there was open interest. That's right here at 415 on the call side, but it's really starting at about 412. 412 being what? The price where we need to get to hold on to green on the month. It's roughly 412.9. And then on the put side, again, there's motivation starting up here higher at 415, and that's worth a lot more. These are worth $5. But where the big volume comes in is here where the open interest is, right here at about 410 to 405. So where would maximum pain be for tomorrow? Drop me a comment and tell me what you think. All right. I think you should know what the number is by now. I'm trying to lead you to water, and you can choose to drink. If you don't want to, that's fine. I'll tell you what the answer is tomorrow. Why? We have one more day before Friday. All right. So now that we understand what is happening here, is there a significance of the 417 and 407 area on the weekly chart? Let's look at SPY now. So looking over here, we note that, that's right. Yesterday we had a hammer, and today we do not. Today we're up by 74 cents on the week, or 0.18%, which means the candle yesterday looked a lot different than it does today. Today it looks more like a spinning top. It is still kind of a hammer, but it kind of looks like last week's where we're closing higher than we opened, but it's not really all that great. Why? It's a solid green candle, which means that even though we're higher than last week, we're lower than where we opened the week. We opened the week at 414.76. And that's important to me because it means that as of today's close, which is Wednesday, we are lower than where we opened on Monday, which basically means we're a little bit less bullish today than we were on Monday. On Monday. Monday open. So if that's the case, again, we know we have a daily inside bar, which is really tight. And then here on the weekly chart, what do we have? We got a weekly inside bar. And is there any significant areas here? Yes, sir. It's that 4110. Why? Well, look at the real body here. The close is 412. The close here is 411.3. Isn't that kind of where we closed today? It's pretty close. Yep. Last week we closed at 410.54. So there's a lot of liquidity on that area. Yep. Going back to where? Going all the way back to where the volume really kicked in. So how can we break 416, 417 with conviction if people are only willing to get their money back? Again, remembering that people who bought here back in late April have now finally had 1, 2, 3 chances to get their money back. and people are choosing to take it back. Same thing as people who bought all the way back here in right early and mid-March, right? They want their money back. So that's why we can't break over the range with conviction. They have to be given multiple chances to sell and choose not to. Why? Look at the size of those red bars. They're massive. So for us to chew through all of this volume, which is currently dropping off like off a cliff, we're going to need to have a lot more bars because these bars are a lot smaller. They can't absorb these big cells, or we have to have time on the chart. So that's what we're doing here. We're putting time on the chart by going where? Sideways or nowhere. That's really important to keep in mind because we're still in a bullish pattern here. And the bullish pattern is, again, what we reviewed on the weekend deep dive a couple of times now. It's a, inverse head and shoulders, where if we're able to reclaim this neckline here where the white arrows are, we can shoot up, we can back test or land on our right shoulder before maybe going higher or maybe not. But those daily charts we're looking at are pretty much setting up that bullish potential continuation inside of here. And because we've had a lot of time on the chart now, everyone's had a chance to position. And the moves are getting dramatic. Again, one up day, two down. One up day, two down. One up day, I don't know. All right, a few more things to look at now, and then we're going to wrap it up by just signing off. Let's look at the heat map, and let's have a look here. Pretty boring. Red pretty much everywhere. Whoa, they've rearranged this one too. Finance looks bigger now. Technology's on the bottom. Okay. Well, just looking here, financials have a little bit more red. I don't know why. The headlines I heard from CNBC today were that S&P falls 1% as investors gauge chances of economic slowdown. Right? Okay, cool. So that would make sense. Why? Well, are banks going to be able to pay for loans if there's no interest and these companies go bust? The answer is no. So no interest and companies going bankrupt means banks are going to have to eat the difference. That kind of makes sense. Technology. Yeah, well, the 10-year note advanced today. That's a direct competitor for technology stocks. So it makes sense that these ones are down. Intel also guided down. There was a conference today at Bloomberg where Intel basically said that, yeah, we're revising our guidance lower. That left an overhang. And Andy Jassy also spoke at that same summit today in San Francisco. All right, otherwise, it's a little bit boring everywhere else, right? Basically, a little bit red, but not too bad. So now let's finally look at some charts, some final ones here. And the reason why we're looking at these is because there is the potential for a big move into tomorrow. So if you haven't already taken the chance to position to be ready for that, you kind of have to do that now. And I apologize if there's a cutoff in the audio here or the video. I had an issue with the recording, just pushing through to make sure I can just get this finished. So a couple of charts we want to look at here are going to be the SPY. Here we can note that we've reviewed it. It has an inside bar. We're going to look at other ones here and just see whether or not they're flashing any warnings or not. QQQ, what do we got? 303. We got a lower low and a lower high. So that's not an inside bar anymore. It's a bearish print lower. We actually broke last week's range. All right, looking at a few more. DXY we know is bullish, so right, higher high, higher low. That's a warning. VIX, lower low, lower high. Perfect. What about TNX? Higher high, higher high, higher low. Bullish. That's bearish for stocks. Oil, higher high, higher low. Crap, right? That's 3 out of 3 that we don't want to see higher. Sorry, VIX was down. DXY, TNX, and CL were up. Bitcoin. Lower low, right? Lower low and lower high. That's same thing as QQQ. ETH, 1735 last week, 1725 this week. Lower low, lower high. Crap, right? We're getting some warning signs here. Looking at Apple, oh no, lower high, lower low. In a pattern that kind of tells us that if we can't hold, we're probably going to push down. Maybe back to 140. Microsoft, inside bar. Microsoft stronger here, looking like a leader. Google, higher high, higher low. Okay. Amazon, shooting star, inverted hammer, but higher high, higher low. Tesla, lower low, lower high. Crap. Facebook, higher high, higher low. Nvidia, looks like it just barely held. 1812, 1818. Yep, higher high, lower high, which means inside bar. Okay, final ones here to look at. So now we know that there's some mixed signals here, but we're getting a little bit of bearish warning. Let's look at some ETFs. DIA, inside bar. XLK, lower high, lower low. IWM, higher high, higher low. Right around the resistance though, right? This was our target to sell at. It already hit it. What are we going to do from here as we hit resistance? I don't know. ARK, higher high, higher low. NYA, higher high, higher low. RSP, higher high, higher low. Those ones specifically kind of tell you that 2,000 stocks for the NYA, the Russell 2000, and the average weighted S&P stocks are what? Putting in higher highs and higher lows when what? Our trillion-dollar companies are not really, and that's a warning. XLF, lower high, lower low. XLV, inside bar. XLE, higher high, higher low. XLU, that's a lower low, lower high. Higher high, higher low. And then EEM, higher high, higher low, bullish. FXI, busting, right, with accommodation. So we have some mixed signals here, but hopefully got some value today. You like the analysis on SPY, and I would really appreciate if you could drop me a comment and tell me the most favorite part of the video. Thank you for watching. I look forward to seeing you tomorrow.